Hello everyone, you're welcome to my channel, and today we are going to talk about credit policy. Introduction and overview of credit module A of certified credit professional course. Now, what is a credit policy? A credit policy is also referred to as loan policy of a bank. It is generally aimed to accomplish its mission commitment to excellence in customer service, shareholders, and employee satisfaction. Now, the bank board is generally the apex authority in formulating the credit policy of a bank. Now, credit function of the bank covers all activities like sanctioning, issuing, and collecting various types of loans and advances. Credit includes different types of loans, advances such as cash credit, overdraft, demand loan, term loan, bill purchase, letter of credit, bank guarantee, co-acceptance, etc. And branch is the main delivery unit of credit in a bank. Now, in order that all the officers and department branches follow appropriate guidelines and take correct decisions, such as the bank is able to comply with regulatory standards, internally set risk profile, maintain the quality of credit portfolio, the profitable bank must have a well orchestrated and written credit policy. So, if I have to give you a simple definition, a credit policy is a document which contains specific guidelines for all types of credit decisions and determines the composition of its overall credit portfolio. Credit or loan officers are the officers and the management of the bank who will adhere to the credit policies, who will follow the credit policies. So, the main objective of credit policy is to maintain a healthy balance between credit volume, that is, number of loan accounts, earning, the profit which you are making from these loan accounts, and asset quality. How good are the loans which you are giving? Are they turning into NPAs? That is called asset quality. And this should be within the framework of regulatory prescription, corporate goals, and social responsibilities. The policy will thus aim that the credit expansion should be steady, sustained, and prudent. It should enable good earning and steady rise in profits while maintaining a close watch on quality assets. Now, what is a policy framework? Credit policy is a formal statement objective of a bank. This policy is approved by the bank board and takes into account various regulatory guidelines. The main purpose of this written credit policy is to ensure that the bank operates within prescribed risk tolerance limit. The policy should be clear in terms of risk tolerance, as the market is very competitive, the environment is challenging, and in the absence of defined risk limits, the loan credit officer might accept a risk exposure which is not as per the bank. The credit policy should also be periodically updated to include new products, respond to the changes in the risk environment, or adapt to new regulatory directives. The credit policy must reflect the realities faced by the operating staff handling lending function of the bank. However, if a bank has its branches abroad, the same policy may not be applicable in foreign branches entirely. Now, what are the contents of credit policy? So, if you see a credit policy, what does it include? It includes the purpose and the contents, the objective statements, the lending authority and responsibility, the controlling authority, sign off, credit denial and recording procedure, portfolio composition, credit concentration, and diversification limits, types of loans, appraisal standards, policies, procedures, and format. Now let's talk about appraisal standards. Now, banks have over the years developed scientific credit appraisal methodology, which are being constantly tested in the light of experience gained by the bankers from time to time. However, the basic standards for working capital, both fund and non-fund based, and term loan have stood the test of time and are well understood. Certain basic parameters have by and large evolved over the years. This could broadly be classified as qualitative and quantitative. So, if you talk about qualitative, the proposition is examined from the angle of viability and also forms the bank prudential levels of exposure to the borrower. Okay. If we talk about the quantitative aspect, let's talk about working capital. It takes into picture liquidity, net working capital, financial soundness, turnover, profit, credit rating, capital markets. The term loan and deferred payment guarantee looks into the aspects of technical feasibility, promoters' contribution, debt service coverage ratio, and margin on security. Now, lending to non-banking financial companies also takes into picture a lot of aspects, especially which are related to non-banking financial companies. Financing of infrastructure projects. Most of the banks have set up separate project finance division for financing infrastructure projects. For lease financing, there are certain standards which have to be followed. Similarly, for letter of credit, guarantees, and bills discounting, there is also a different way to deal with it. Syndication of loan, hedging of forex risk, fair practice code for lenders, risk policy, documentation responsibilities, loan file requirement, all these things form the part of credit policy. There should also be loan loss provision policy, loan grading and credit scoring, loan review and renewal policy, charge of accounts. Now, there is also an element of priority, the role assigned, and the MIS and review. So, credit policy basically serves as a gatekeeping function for the bank. It defines the thrust areas relating to credit culture, profit objectives, and regulatory directions. So, as a banker, you should be aware of the credit policy of your own bank. You should go through it and you should try to follow the credit policy in whatever credit appraisal you are doing for a particular customer. So, let me ask you certain questions. I'm sure these questions will enhance your understanding and you'll be able to answer these questions as well. Question number one, the main objective of a credit policy includes maintenance of. Okay. Question number two, the function of credit policy does not include defining of. Let me give you the four options: branch expansion network, thrust area in relation to credit culture, acceptable level of risk, and profit objective. Okay. Question number three, under which guidelines the exposure norm falls? Statutory, regulatory, prudential. You can answer any one option. Next question, the aggregate exposure of bank in respect to individual and group borrowers is linked to net worth, equity capital, capital funds, total deposit. I'm sure you know the answer. Next question, which one of the following exposure is not excluded while reckoning capital market exposure of bank? So I hope this video would have given you a lot of valuable information on this important chapter. If you like this video, you can press the like button, subscribe to our channel, and share it with your friends and family. Thank you. Have a great day. Bye bye.